for tuning into Financewize, the show that empowers you to make informed decisions about your money. On today's show, we will be discussing debt and debt management. Many people are currently in a situation where they feel overwhelmed by debt and do not know how to get themselves out of it. Debt in its simplest form is an obligation to pay another person or institution an amount of money in the future that you have borrowed in the past and have probably already spent on other expenditures. Many people find themselves, for lack of a better word, drowning in debt. This is because they consume or spend beyond their means. This means that their lifestyle is such that they spend more money than what they actually earn in terms of an income. A debt is an obligation owed by one party, the debtor, to a second party, the creditor. Usually, this refers to assets granted by the creditor to the debtor. But the term can also be used metaphorically to cover moral obligations and other interactions not based on economic value. But before we get into all of this, let's see what ordinary Namibians have to say about debt and their debt situations.
What is debt?
Okay, debt is when someone buys something on credit and then has to pay it off on a monthly basis or so.
Okay, my understanding of debt is things you owe other people, okay? That is not entirely your own.
It's a way that people using other people's money to buy things for themselves that they can't afford at that particular time.
Do you think debt is a good thing or a bad thing?
It's a good thing if you manage it well. I think if you know what your upper level of debt would be, how much debt you can go into, then if you manage it well, then you can grow personally, and then you can repay your debt and have a good life. Actually,
it's a good and it's a bad thing. It's good in terms of you can divert your money to doing something else, right? If you can afford to pay off little, as long as you maintain your installments and you pay your installments on time, right? And the bad side of it is we tend to get too comfortable with getting things on credit as opposed to paying for cash. Because you think you're going to pay for them over a long period of time, the installment is not so high, but forgetting about the interest that you pay, should you have bought that thing cash, you would have saved a lot of money.
It depends. Good thing on one area, very bad if you can't control it. Bad in the sense that when you actually take and you cannot afford to repay what you committed or promised to. But it's good, for example, to buy property where you cannot, for example, buy a house cash or a vehicle, for example. Yeah.
What advice would you give to our viewers on managing their debts?
Try to live with the pay that you receive each month. Try to live with that, within that means.
Do you feel that you're overly in debt?
No, I don't feel so, because I try by all means to buy most of my stuff cash, and I do not buy stuff that I don't need, and I try not to, how do I put it, to live beyond my means. I live within my limits.
A debt is created when a creditor agrees to lend a sum of assets to a debtor. Debt is usually granted with the expectation of repayment. In modern society, in most cases, this includes repayment of the original sum plus interest. In finance, debt is a means of using anticipated future purchasing power in the present before it is actually earned. Some companies and corporations use debt as a part of their overall corporate finance strategy. The next training clip focuses on debt and debt management in some more detail. Private debt comprises bank loan type obligations. Public debt is a general definition covering all financial instruments that are freely tradable on a public exchange or over the counter with few, if any, restrictions. A basic loan or term loan is the simplest form of debt. It consists of an agreement to lend a fixed amount of money called the principal sum for a fixed period of time, with this amount to be repaid by a certain date. In commercial loans, interest, calculated as a percentage of the principal sum per year, will also have to be paid by the date, or may be paid periodically in the interval, such as annually or monthly. There are many conventions on how interest is calculated, but a standard convention is the annual percentage rate, or APR, though there are different forms of APR. A syndicated loan is a loan that is granted to companies that wish to borrow more money than any single lender is prepared to risk in a single loan, usually many millions of dollars. In such a case, a syndicate of banks can each agree to put forward a portion of the principal sum. Loan syndication is a risk management tool that allows the lead banks underwriting the debt to reduce their risk and free up lending capacity. A bond is a debt security issued by a certain institution, such as companies and government. A bond entitles the holder to repayment of the principal sum plus interest. Bonds are issued to investors in a marketplace when an institution wishes to borrow money. When you use credit, you are borrowing money that you promise to pay back within a specified period of time. A credit score or credit rating is a statistical method to determine the likelihood of an individual paying back the money he or she has borrowed. This is why when you are borrowing money from a bank or applying for an account at a furniture retailer, they will usually inform you that they will need to run a credit check before approving your loan or account. Some of the factors used to calculate an individual's credit score are his or her credit payment history, current debts, time, length of credit history, credit type and mix, and frequency of applications for new credit. Debt allows people and organizations to do things that they would otherwise not be able or allowed to do. Commonly, people in Namibia use debt to purchase houses, cars, and many other things that are too expensive to buy with cash on hand. Companies also use debt in many ways to leverage the investments made in their assets. This leverage, the proportion of debt to equity, is considered important in determining the riskiness of an investment in a company. The more debt, the riskier the investment. For both companies and for individuals, this increased risk can lead to poor financial performance or even bankruptcy, as the cost of servicing the debt can grow beyond the person's ability to pay due to external events such as the loss of a job or income, or internal difficulties such as poor management of personal finances. Excesses in debt accumulation have been blamed for exacerbating economic problems in certain countries. For example, the current sovereign debt crisis taking place in many European countries is due to the fact that the debt levels of many of these countries are very high, and therefore it's difficult for the governments of these countries to finance this debt. If you feel that your debt situation is becoming unmanageable, there are several solutions that you can look into via the services offered by certain organizations. We talked to some of these institutions to gain more clarity into how an individual might manage their debt situation a little bit better.
Hello, my name is Jens Kok. I'm a partner in the Risk Advisory Division at Deloitte in Namibia. Deloitte & Touche is a global firm. It was founded 1845 in London. It is one of the big four accounting and auditing firms worldwide. 182,000 employees, presence in 150 countries. In Namibia, we've been operating since 1959, so it's over 50 years, and we serve a wide variety of clients. We provide accounting, auditing, risk advisory, financial planning, tax and consultancy services, and we've got more than 80 staff in Namibia and 7 partners. Debt is dangerous, first of all. Debt is, I mean, we all know it, it's money you owe someone else, but it can come in many different forms. So you can have individual debt, people owing, for example, on their TVs, on their cars they buy, whatever, on their houses. You can have corporate debt, which is companies owing money either to revenue authorities, to banks, to whoever. And you can even have national debt, the government owing money to its citizens, owing money to other nations. So it comes in different formats, and it's of course an obligation to pay someone what you have borrowed from them. A credit rating is a score whereby someone independent evaluates you or a company or a government how likely you are to be able to repay your debt. For example, in Namibia, for individuals, there's a company that does it. It's called ICT Namibia Pty Limited. They basically look at your history on how you've been able to honor your bond, whether you have serviced your credit card, whether you have serviced installments, and they keep a rating that if you want to buy something on credit, for example at Edgar's, they access that rating. And if you have a bad rating, you don't get a credit. So it's very, very important to have a good credit rating. Same for corporates. They can be rated by agencies like Standard & Poor's, Moody's, Fitch, and even government. So if Namibia has a poor credit rating, they will struggle to finance their debt. So credit ratings are very, very important. We do all kinds of services. First of all, we mostly deal with corporate clients, so we don't deal directly with individuals that much. But indirectly, for example, we audit a lot of banks. In Namibia, we audit 2 banks. So in auditing those banks, we look whether the banks comply, for example, with the Usury Act, that they don't charge individuals exorbitant amount of interest for their borrowings, for example. But we also offer debt restructuring and advisory services. So say if a company has too high levels of debt and they want to consolidate their debt or reduce their debt, we help them on how to do that. And also, say a company goes into liquidation because it has too much debt, we also help them to deal with that properly in an orderly process. First of all, and that's also my personal motto, this is really important. Never ever finance a depreciating asset. What that means, never ever incur debt for something that loses value. That is typically like a car. Okay, it's difficult for a car maybe, but a TV, clothes, etc. Those items lose value. So you incur a debt on which you pay interest, which you will struggle to repay, and at the end of the period, your asset is not worth much anymore. Instead, rather finance assets that increase in value like a house. That's a good investment. For that you can incur debt, avoid debt for anything else. That's the biggest thing I think you should be aware of. And then other common sense things like track your money, save before you borrow, know your expenses, calculate your installments. In other words, don't over borrow and keep track of what you're actually incurring as debt.
Now let's see how our resident investor Peter deals with some debt issues of his own.
Go Peter, go Peter. Yo, Peter's in the building. Yo, Peter's in the building.
apartment I was talking about. It's 200 square meters. It's newly painted. It's in the center of the city. It's got an alarm system, a security guard, a great parking area, as well as an elevator.
Okay.
You know, let's just go see the rest of it then.
Okay.
Well, as you can see, this is a bachelor flat. The tiles were just recently put in. Over there we have the kitchen. This is the sitting room where we have aircon as well as we have an internet connection. A young man like yourself in this place, it's like the perfect guy.
You know what? Okay, I'm gonna take it. I'm definitely gonna take it, you know. I've got a new job. I think I'll sort everything out. I'm taking this place.
Fantastic choice, fantastic.
Fine, how are you doing?
Fine. I actually want to purchase a lot of stuff. I was thinking about the iMac, the iPod, and a laptop.
Okay.
Yeah.
Well, we've got some iMacs here, so you can the range model.
Yeah.
It's got an i5 processor, 1TB hard drive, and a 27-inch widescreen display.
Well, this is like the best one, right?
This is PS here. It's got an HD display, it's 3D display as well. It's got a Blu-ray player, an i7 processor, and 5 different laptop bags.
Hello? Yeah, it's Peter speaking. How may I help you? Oh yeah, sorry. I forgot to pay my, it's just that I'm out of town right now and I can't pay that account right now. I'm sorry. Yeah, I'm 3 months I'm 3 months behind.
Sorry, this is not Peter. Yeah, he just left the phone on the charger and then he went.
Go Peter. Go Peter. Yo, Peter's in the building. Yo, Peter's in the.
Hello, I'm looking for Mr. Scar.
Why are you looking for Mr. Scar?
A friend of mine told me that I can talk to him about a loan because he said that he helps out people and that we can repay him. It's maybe possible if I can talk to him.
Where did you get Mr. Scar's contact details from, if I may ask?
I got it from a friend of mine. He said I could just come here by the office and talk to Mr. Scar. Are you Mr. Scar?
Yes, I'm Mr. Scar.
Oh, nice to meet you, Mr. Scar. I'm Peter. Anyway, Mr. Scar, I came across this problem that I'm in debt at the moment, and then I really want you to help me out with money so I can pay off this debt, please, if it's possible, because these debt people are really on my case at the moment, and I just want to get rid of everything. If it's possible, Mr. Scar, I'll be grateful.
In your case, I can make an exception. How much money is it that you're looking for?
Mr. Scott was thinking of $30,000, if it's possible. That will clear all my debt for me.
Well, I usually don't give loans under 50,000, but I can make an exception of you.
Okay, thank you, Mr. Scott. That will be really great.
Only one thing, this loan will come with terms and conditions. It will be 50% interest that you'll have to pay on top of this loan.
So excuse me, 50%?
Yeah.
Isn't that, Mr. Scott, is that not a little bit too much, 50%?
Like I said, Peter, I'm not a bank. And I don't operate with individuals on your level.
Okay, Mr. Scott. Yeah. Mr. Scott, okay, 50% is okay. I will get you the money.
I'll need this loan back within 1 month, Peter.
In 1 month?
1 month.
Mr. Scott, I know you, but like you said, you are working with big people. I mean, like, okay, I will do it. I will give it back in 1 month's time.
Now hope, Peter, for your own safety, that this money will come back in time.
Yeah, I will bring it back in time. Thank you. No, I'll assure you that you don't have to worry. I'll get you your money back. Thank you very much, Mr. Scott. Thank you. Before I leave, can I just please ask something? Why do they call you Mr. Scott? Oh, sorry, never mind. Sorry.
Peter! Peter, where are you? Peter! Boss, he's not here. Okay, I'll wait for him. I'll be back. Peter! Compliments from Mr. Scott. We'll be expecting you in 1 day.
Sir, are you alright? Should I call the police?
No, just go.
Okay.
If you are interested in a career involving debt management, you may try your hand at becoming a debt advisor. Debt advisors provide advice to clients on the best solutions to their financial problems. We spoke to some institutions involved in the provision of debt advisory services to gain some more insight into their work.
My job personally, I'm a partner in the risk advisory service line, so I advise clients on matters like external audit matters, internal audit matters, forensics, which means fraud investigations. We do IT audits, security of computer systems, IT consulting, like review whether computer systems have been implemented correctly. And what is growing in importance also is governance services, corporate governance, whether boards of directors meet their duties and whether they're properly qualified, etc. And then over and above that, risk management services, so whether companies properly manage their risks. Okay, you need a professional qualification. That's an absolute must. Those qualifications typically are the chartered accountant. That's the primary qualifications we look for. But also qualifications like a certified internal auditor, a certified information systems auditor, or even a higher diploma in tax. It depends on which service line you want to specialize later on. Okay, people wanting to work in this environment should, first of all, they should have good marks in school. That is very important, specifically in the subjects of maths and English. Accounting is not that important, funnily enough. You can pick that up at university, but you must have the maths ability. In other words, you must have an analytical mindset. You must be willing to work hard. But you must also be a people's person. We are working in teams and we interact a lot with clients. So we need people that can relate well to other people on a professional level. Yes, as I said before, never finance a depreciating asset. That's, I think, the golden rule. Also calculate your installments, what you are paying, and assess whether you can afford that. Before you borrow, consider whether you really need what you're wanting to borrow for, or whether it's just a nice to have. Do you really need new clothes? Do you really need a new TV if you have to finance it on debt? Rather save before you borrow. And then never overextend, in other words, never borrow too much. And then, of course, prioritize. Borrow only for things that are really important, like accommodation. That's generally the big one. And try not to borrow for things that are not that important.
Please remember that the points made in this program are not meant to give you personal advice. There is no one-size-fits-all approach to investing. The point of this program is to give you a more tangible look at how an investor might implement the ideas that we've discussed. There are many other alternatives out there, and we strongly encourage you to explore all of them and find out what works best for you. When it comes to debt management, some good ways to reduce your debt are to budget prudently, to work out a payment plan with regards to your debtors so that you can still live a reasonable standard of living. Also, pay off your smallest debts first, consolidate your debt, especially if you have accounts which are already in arrears, and try to pay more than the installments whenever you have monthly bills to pay. Cut down on expenses and always plan ahead. Whatever you do, keep the principles we've learned in mind and never stop trying to learn more. This is Dantikos Jimmy encouraging you to get finance wise. See you next time.